Just a few short years ago, in order to see a movie, you would have to go to the movie theater or a drive-in theater. Then Blockbuster hit the scene and opened up thousands of stores nationwide. Now you could rent a VHS tape and watch your own movies from your own home with your family and friends. The drive-in theaters slowly started to close. This put a lot of pressure on the walk-in movie theaters as well. But then corporate greed kicked in. Considering Blockbuster was the biggest game in town, they charged late fees that were very excessive, and as time went on, they did not keep up with the evolution of technology in this industry. The new sheriff had arrived. In this video, we will be covering some of the history and fascinating facts about Netflix. In the second segment of this video, we're going to cover and take a look at some of the financial fundamentals. This is the reason why we want to invest in this company. And in the third segment of this video, we want to take a look at a little bit of technical analysis to see when is a good time to buy into this stock. So we're not buying when it's extended, we're buying at the right price. The journey of Netflix from its humble beginnings to its current status as a global entertainment giant in the heart of Silicon Valley. During the dawn of the digital age, a quiet revolution was about to change how the world consumes entertainment. This is the story of Netflix, a company that dared to dream beyond the screen. It was 1997, Blockbuster ruled home video, DVDs were just gaining traction, and two entrepreneurs, Reed Hastings and Mark Randolph, had an idea. DVD by mail, a rental service with no late fees. Radical, convenient, revolutionary. The idea came after being charged a $40 late fee for returning Apollo 13 to Blockbuster. Netflix eventually launched in 1998 with just 925 titles. By 1999, they introduced a monthly subscription model, unlimited rentals, no due dates. It was the first step towards dismantling the Blockbuster empire. In 2007, Netflix made its boldest move yet: online streaming. No longer just a DVD rental service, Netflix was becoming a tech company pioneering digital delivery of films and television at a time when the internet was still buffering. Their library grew, their user base exploded, and in 2010, Netflix expanded beyond the US, launching in Canada, their first international market. In 2013, Netflix released House of Cards, their first original series. It wasn't just good, it was award-worthy. The show earned Netflix its first Emmy nominations, a signal to Hollywood that the rules have changed. The gatekeepers of content were no longer just studios and networks. Soon followed hits like Orange is the New Black, Narcos, and Stranger Things. By 2016, Netflix was available in over 190 countries. By 2018, Netflix had over 130 million subscribers. It wasn't just a platform, it was a cultural force. In 2019, Roma made history, earning Netflix its Best Director Oscar. The message was clear: streaming could be prestigious, but with success came competition. Disney Plus, HBO Max, Amazon Prime entered into the arena. The streaming wars had begun. Netflix wasn't just leading the industry, it created the industry. The COVID-19 pandemic saw a massive surge in streaming. Netflix passed 200 million subscribers in early 2021, but in 2022 brought turbulence. For the first time in over a decade, Netflix lost subscribers. Stock prices dipped. Analysts questioned its future. Netflix responded with innovation, launching an ad-supported tier, cracking down on password sharing, and expanding into gaming and live content, including their first live comedy special with Chris Rock. International content became their secret weapon. Squid Game from South Korea became a global phenomenon, shattering viewing records and cementing Netflix's global relevance. From mailing DVDs to dominating the screens in over 190 countries, Netflix has reshaped entertainment, democratized content, and redefined success in Hollywood. As of 2025, with over 265 million subscribers, dozens of original hits, Oscar wins, and global reach, Netflix continues to adapt, evolve, and entertain. It's not the end of the story, it's just the next season. Let's take a look at some of the financial fundamentals of the corporation to see what kind of financial condition they are in. This is the reason why we want to buy into this company, if they are worthy of our hard-earned dollars. Netflix. Today, August 7th, 2025, Netflix closed at $1,180.37. The current market cap for this company is $501 billion. The average volume that's traded daily on this company is 3.7 million shares. The current PE ratio is 50, which is considered to be high for a company this large. This is a very high PE ratio, but considering that we are in a bull market, PE ratios will tend to run on the high side. When we look at June of 2024, we have a revenue of $9.5 billion. The net income is $2.1 billion. When we fast forward a year later to June of 2025, the revenue is $11 billion. The net income is $3 billion. Now, what we want to look at, so when this revenue is $11 billion, this is the number we want to look at. This is a year-over-year change of 15.9%. The operating expense at $1.98 billion. This is an increase of 11%. The net income is $3.1 billion. This is an increase of 45%. The net profit margin, 28.21. This is a 25.6%. And the earnings per share is $7.19. This is a 47% year-over-year increase. These numbers look pretty stellar. So we're going to take a look at the charts to see when is a good time to scale in and buy into this incredible company. If you have something you would like to share with us, please leave a comment below. We want to hear from you. We are looking at the charts of Netflix for the close of August 7th of 2025. This is a 20-year monthly chart. Each candle represents 1 month. As you can see, the low was $2.23. 20-year high is $1,341. Now we're looking to buy into this company. When are we going to get into this company? We want to wait for these downdrafts. We want to wait for these corrections. And this is when we want to participate. If your financial house is in order, and you have the S&P 500, you've got the NASDAQ 100, and the Dow Jones Industrial, you will be invested in over 600 companies. That is well diversified, and you will serve yourself well. You want to invest in that on a weekly or a bi-weekly basis. But if you're looking to buy into this stock on an individual basis, then what you want to do is you want to wait for these major corrections or these pullbacks. And we're going to look at a weekly chart. This is our 2022 COVID meltdown. Netflix hit a low of 162.70 and recovered a lot quicker than the rest of the market, but it went into a bull phase, and it's been into a bull phase for the past 3 years. This is a 1-year daily chart. Each candle represents 1 day. The white line is the 10-day moving average. The purple line is the 21-day moving average. The green line is the 50-day moving average. The red line is the 200-day moving average. And the reason why this is important is you want to see how the stock is respecting its moving averages. So it's riding a 10-day, breaching it occasionally and hitting the 21-day and the 50-day moving average, and in the past year it's hit the 200-day moving average 1 time. If you look at the top of this range, 1341 is going to be resistance going forward. 1277 is going to be resistance going forward. It's currently trading at 1180.37, and we're right here. As you can see, we're right into all of the moving averages. This is actually a good time to start scaling into this company. You want to scale in on the moving averages and support and resistance areas. This is a support area is going to be 1144.71. Now you have to keep in mind there are no guarantees in the market. There can be a major meltdown that can go into a recession. There can be a war. The market will crash again. That is guaranteed 100%. But when these meltdowns happen, this is when we want to get in. This meltdown was in the range of when Trump announced the tariffs, and it corrects itself and goes back into a bullish phase. The stock is still considered to be in a bullish phase. Looks really good, and it's already pulled back, and this is what I like about where the stock is right now. Can it come down and test 1,064? It certainly can. It could come down here and retest this 200-day moving average also. So if you wanted to scale in, you could scale in at a 25% ratio. So you're going to go in and put 25%, $2,500 into a position now and see how this stock is going to play out. The only concern that I see is this volume right here. It had a major downdraft, and that is the break of this pullback from the 10 and the 21-day moving average was this day here. And why did it break? Because of earnings. The analyst estimate was $7.04, and they beat it by $7.19. The street did not like that, and it is selling off even more, and it's pulling back to this area here. We have a balance area that was established here. This is going to give us a nice level of support, and it's proven itself. It's stayed in this range. It hasn't breached it. It's just staying right in there, and it certainly can breach it. That's why you want to scale in at a 25% ratio, because if it breaches it, then you're going to come down here, will be your next stop, and then this is going to be the next position that you're going to scale into this company. So you can put your 25% into this stock right now. We are currently in a down channel, a downward trend channel. This is a little bit concerning, so we want this to breach this channel, come back and retest it. In a perfect world, I would consider right now as a good time, and then also look at 1144.71. Breaches this channel and retest it, then you can take another 25%. And then you're going to look at your 10, 21, and your 50-day moving average is where you want to scale in on this stock. For more analysis like this, subscribe to the channel. We will keep you informed on the latest, greatest companies to invest in. I put some links in the description of trading platforms and financial institutions so you can set up your account and start building your retirement portfolio for your future. Always remember that the markets are very risky, and the key to success in this industry is a well-balanced portfolio. So please remember to do your own due diligence, dot your I's, cross your T's, and don't forget the Z. God bless and happy investing.